Alright, here's trade one. I'm risking 0.5% of this account. I'm shorting two contracts and I'm not trading the stops early. Giving this trade some time to breathe. I see that it will be invalidated if price trades above the inverted fair value gap, orange shaded inverted fair value gap. So I'm waiting to see, and I'm expecting maybe some weeks, but I don't want to see bodies close above that array, else I'm out of the trade. So it starts displacing my favor, and then it gets slow. So I'm doing real time commentary. You can see real time commentary on the chart. My narrative is bearish. I'm looking for sell side of the higher time frame, and at this point in time, price is not giving me the bearishness I need. I've seen a liquidity sweep. I've seen we're trading in equilibrium, so I'm looking for discount prices, and price keeps insisting on inverting the inverted value gap. It seems on reclaiming the inverted value gap, I'm trading above it, and I start getting my losses short on that trade, and eventually I get my last position off, and I'm out of that particular trade. But later on, I find another setup, and here is it. So on this particular trade setup, I'm shorting with the same idea from the first, just that this time I've looked at the higher time, I've looked at the 5 minute and the 15-minute time frame, and I'm seeing that the first setup was still valid. So my objectives are still launch lows, regular trading hour launch lows. I've looked at it again. I've put my stop at that level, my take profit at that level rather. My stop is above the swing high, which is also based on the 15-minute, rather the 5-minute CB. So I'm trading that fair value gap as well. You can see it at the closest to the right of the screen. The price invalidates that CB and eventually goes to that swing high and stops me out. And those two trades, I lose 0.5%. Impeccable risk management, that's how we do it. Now let's get into this review. This is review for Tuesday. So we're reviewing Tuesday the 24th February 2026. Now you look at this session, this Asia. So Asia session from 7 p.m. to 5 a.m. New York Eastern Time. Asia sell stops are right here. They get rated but very shallowly. So we have a pool of sell stops here. So this major sell side liquidity going into other sessions like London and New York. As well, you can look at these lows, relatively equal lows here. That's another pool of major sell side liquidity. I'll align them as MSL. And right here you have a key low. This is a New York PM low. You look at the regular trading hour time frame to the left, this 15-minute time frame, you can see this is New York PM low. Look at the cursor, it aligns. So that's the regular trading hour sell side liquidity pool. Now price is in sort of a consolidation. We have Asian highs here, and we have these three pools of sell stops, major sell side liquidity pools and New York PM lows. If you look at the weekly forecast, you see that I'm bearish, and I'm looking to see us trade below last line of defense, New York opening gap, and this weekly discount week comes to encouragement for me to be purely bearish. But for now, price trading above it. I'm going to the pre-market session. Pre-market is here from 7 a.m. right here, 7 a.m. Pre-market takes Asian high, retraces and just consolidates onto the open at 9:30. Now the opening bell at 9:30 is interesting today because it did not give me the filters I needed for going long on the counter item from idea. So price opens, boom, it hits the two major social liquidity pools from Asia. It finds support at the high of the new week opening gap, the last line of the first new week opening gap, and does not hit New York PM high. At this point in time, I'm not looking to long this market. I did not know it was going to reject and form an inducement. At this point in time, I'm looking for New York PM lows to get hit. And nothing is going to change my mind about that because we're too close to the pool and it's a very good pool of sell side liquidity. So I expect this to be taken even if we're going to rally higher. So as a basis to rally higher, we should have this taken out, and maybe we'll find that okay, we're deep in the discount look for Chalmers model to target midnight opening price, 8:30 opening price during maybe the 10 a.m. open or the 9:50 to 10:10 macro or something like that. But that was not the case. Price induced this level, came so close to it, a major pull of sell stops from yesterday, and it just rallies away. This is like a hitman getting into a house, meeting his target, putting a laser on the back of his head, and running away. As a spectator, you're gonna be looking at that and like, bruh, that's suspicious. So this was as suspicious as that. I was not looking to short this, or rather, I was not looking to long this because we were so close to New York PM lows. I could not short because we were so close to it, and that was the target. I was looking at launch lows as well, but to see uh, a short setup for launch lows, which are right here, and near the retracement, at least to the Reaper, it retraced to the Reaper, but I did not see any confirmation for shorts. So it retraced to the Reaper, but no market structure shift, no change instead of delivery on lower time frame, no respect for a CB, even this OB. Everything was just moving higher. So I let it run. It ran higher to New York PM highs, to pre-market highs rather. That was a New York ATM model. Delivered, sell side, readed, buy side, taken. But I was always gonna fit this model. I was gonna fit this model today, given that we induce this level. So I see this whole rally up here as a Judas swing, as a manipulation. And I think we're manipulating to clean buy side liquidity right here. So before the session, I outlined this void portion and this New York AM highs, which could be draws. But this is the main pool of liquidity here, this clean buy side liquidity. I think that's what we're going to. We're going to shake up those waters, make them muddy. Other pairing will take place, someone will get short, and we're going to come down for this induced lows because there's even going to be a bigger pool of sell stops resting here, and nobody's going to be expecting it. So that's what I'm looking at. Price rallies from the open. After taking this pulse of major sell liquidity and inducing this, it rallies to pre-market highs and then retraces to equilibrium. It hits equilibrium, rallies up to New York AM highs, and then we see it move into the launch and New York PM session. What I actually did today was look for shorts after the inversion of this array. So when this inverted value gap formed, actually I saw this bearishness on 15-minute chart. I started looking for shorts here. I got short. I saw some good displacement lower, but then it came back, retraced. And eventually I cut my losses short. And looking at the 5-minute time frame, I saw a CB, this 5-minute CB right here, high of the CB, low of the CB, overlapping with this 1-minute inverted value gap. And after the displacement lower, I get short again, and eventually it takes my stop, which was protected at this high. I'm cutting my short and taking my stop loss really quick, really cleanly, enabled me to not be toasted with this massive rally higher. So the stop loss did its job and I got out of that setup. And that was it for the day of my trading. But retrospectively, prices in a Judas swing higher. These arrays get disrespected. And you see during the 1050 comes in right here. 1050. So that's right there, 1050 to 1110 macro. You see price retrace into this buy side imbalances and efficiency right here, and it rallies taking the target at 11:13 a.m. So that was beautiful, and that was it for the New York EM session. I actually see that I was tipped off by this first candle, so it was unwise to be looking for a rejection lower. The only basis for that was that pre-market highs were taken here. So when I saw pre-market highs taken in close proximity, I thought maybe a reversal could still pan out, but if you look closely here, this is the New York PM high. it comes in here. So with New York PM high right here, it was unlikely that after seeing such a massive displacement higher with a close so high, so far from New York PM high, it was unlikely to see a bearish rejection, because this is clearly not a liquidity sweep. This is not a liquidity raid. This is actually a run, and I expect it to run higher instead of reject. So this candle was tipping his hand, telling me, bro, we're gonna go higher. And the next candle forms a fair value gap per se, retraces, rejects, and it moves higher to those targets. So on a normal day with a good liquidity rate on this low, if this new PM lows are rated, I should have been buying this retracement and targeting buy side. But then what I did today, I'll do it again. I'd actually keep following the rules, and I would not fade something like this. New York PM lows, regular trading hour lows in close proximity. This was an inducement higher. If I was to do it again, I'll still look for shorts. I'm bearish on higher time frame, and that's the plan. And I'm going to execute that plan as long as the confluences align. So if I was given a second chance, I would still not be willing to be long, given that New York PM lows are in such close proximity, and I'm bearish on higher time frame. So that was for the New York AM session. The launch session consolidates, as you can see. It just goes back and forth. It jams this daily suspension block again. Something I don't want to see though, but it hits it again, rejects it, and consolidates right up to the New York PM silver bullet, which is here. It just consolidates, market on close macro consolidates, and market closes. So that was it for the session. That was it for Tuesday's market review. If you found value in that, hit the like button, subscribe to the channel, and if you have not checked out the weekly review, forecast, check that out. I'll see you in the next video.